Welcome back to the show. Charles Tarbey from Century 21 now joins us, and Charles and I had a free lunch today on RP Data. Do you want to explain to the viewers why RP Data paid for lunch?
Wonderful. We have an annual bet now. It's become quite a big event. There were 30-odd people there from the press and so on. And we had a bet last year. Graham bet the CEO of RP Data that the market would not go beyond a certain point, and I felt it would, and it did. But it exceeded the bet quite considerably. It was a pretty strange year last year.
So we've had 2 free lunches in 2 years.
2 free lunches, and the new bet's coming on now, which is the fact that I certainly believe the Sydney market's been doing very well and will continue to do well, but I don't think it'll grow much more than 10% this year in terms of capital growth. So it'll be interesting to see how we go along each month. And
so for the record, you're saying capital growth for Sydney over the next 12 months to the end of December is going to be 10% or less,
yes.
And RP Data reckon it's going to be more than 10%.
Or more, yeah. And I think they're looking at the fact that the top end has started to move, and there'll be some movement pricing in there. There is a situation where, of course, a lot of the prices that are being achieved aren't being recorded, something to do with the New South Wales State Government, which helps my bet achieve a better position.
And as most of my properties are in Sydney, I actually hope you lose the bet,
yes,
and we get more than 10% growth, and then you pay for dinner next year.
We don't want too much growth. We want nice, steady growth.
Exactly.
And that's what we're seeing, Chris.
So clearance rates, what's happening there?
You know, they came in at 63%, 63.2% this week. I'm sorry, somewhere around that, 60. But last year was 57.1. And so that's the important thing, is we're now starting to match apples with apples, which is what we were talking about. But it's in the early 60s on a national basis. Now, Sydney had a 73.2% clearance rate, and that was a better performing one, and Melbourne was more in the 66 range. So you can see that they're still pulled back from where they were, and the reports...
Because they're in the 80s before.
Yeah, the last week's reports about skyrocketing prices, or the show, The Block, on their property prices there, it's really not what's happening. When perception meets reality, reality is going to come off second best.
Now, is it a big Saturday, or what's the word for that? Because we've got Good Friday and Anzac Day over the next couple of weeks, and so a lot of properties have come forward, haven't they?
There is a massive amount of property, and we've got over 10% of it going to auction through Century 21 and my auctioneer, Will and Kate and the team. So they've got a very big week this week. I think there are some 1,100 properties in Sydney alone, so it's going to be quite a busy weekend.
And is there more, we'll look at homes advertised for sale, is there more properties coming on now?
Only marginally, 0.6% or 0.6%. New Zealand market, well, that's really, that's odd, because in Auckland it's dropped significantly what's coming on, but in other parts of New Zealand it's increased rapidly. So it depends on where you are.
Because Auckland's been really pumping for a long time, hasn't it? It
has been pumping for a long time, and the government have put a few things in place to slow it down, which seem to be working in parts.
Yeah. But tough on the first home buyers there.
Yeah,
so if we've got first home buyers whinging in Australia that they're finding it tough, in New Zealand you've got to put up 20%, which is a lot of money.
And that's what they've done to slow it down. I don't know that I agree with that process, because it slows down the building as well, people to provide properties for those people. So a lot of work could be thrown out the door with that as well.
OK, so residential rents now.
Yeah, they've been so steady for a long time, and same as the vacancy rates, but the rents in Sydney are now still peaked at 10.77%, in Melbourne at 7.4%, and in Western Australia 18.82%, giving us an average of 12.33%. So sitting in that range, again, the chart should show that it's been flatlining for quite some time there.
Yep. And then just finally on the vacancy rates as well.
2.2% in Sydney, very, very good. Melbourne 3.4% and Perth 3.65%. So again, 3.08% as an average on those 3 capital cities. But that's really good vacancy rates, between 3 and 4%. Is very, very good.
Again, we've talked about vacancy rates before, so if you're saying, say, Sydney's 2% and Melbourne's 3%, should that dictate to people where they invest? So where should they be using this information?
Well, the problem is, of course, the prices. And, Melbourne's a lot more affordable to buy in, particularly in the apartment sector. As we know, in some of those areas, they've peaked quite substantially in the amount of property that's come on the market. So it might be cheaper to buy, vacancy rates might be higher, but it might be cheaper to get in.
But again, you've got to find the right property, haven't you? Because if you're on the wrong side of it, you could be 100% vacant and someone could be 0%.
Look, this is what really burns a lot of people, and so especially first-time investors, it's really important that they buy in an area where they know they're going to get people who want to rent the higher amount. Not like you. I mean, you're going to go for the bigger properties and pay certainly a lower rental return for that, the owner of the property, but there are not a lot of people around that can do what you do. But you want to buy in an area where you know you're going to get a guaranteed tenant.
And a quick 15 seconds on any other parts of Australia that you can predict capital growth for the year?
I've said it for the last 6 months, stay with it, Brisbane. I'll stay with Brisbane and the Queensland market.
And what kind of numbers are you thinking up there?
Oh, I think definitely above 6% growth this year, and I think I'll probably get agreement with RP Data on that one as well. Their analyst, Tim Lawless, he and I agree for once, which is wonderful.
Wonderful. Charles Tarbey, Stuart Ward, thanks for joining us. Thanks for joining